Amazing find that maps out an entire investment strategy from start to finish.
So check this out. What you're looking at is literally an investor's secret playbook just sketched out on a whiteboard. I mean, this is the entire roadmap from their starting cash all the way to this huge, ambitious final goal. Our job? Let's decode it together, piece by piece.
Okay, so here's the game plan. First, we'll dive into their 50-lock portfolio. Then, we'll figure out the rules behind it. After that, we'll follow the money on its journey to 14 crores. And finally, we'll wrap up with what this whole thing can teach us.
All right, first things first, let's get a snapshot of where the money actually is right now. This is the bedrock of the whole plan. So, the whiteboard gives us this awesome donut chart. And right away, you can see the big kahuna. A whopping 50% is in equity. The rest is nicely spread out. You've got gold, silver, bonds, mutual funds, and then this last slice for cash and something called MTF. Don't worry, we'll circle back to what that is in just a sec.
Okay, and here's where those percentages stop being just numbers on a chart and become real money. That 50% in equity, that's 25 lakhs. And each of those 10% slices, that's a solid 5 lakhs a pop. You can really see how deliberate and balanced this whole setup is.
Okay, so we've seen the what. We know what the portfolio looks like. But, a portfolio without a set of rules is kind of just a random collection of stuff, right? So now let's dig into the why. What's the logic driving all this? And really, that's the million-dollar question, isn't it? Any serious long-term plan needs a core philosophy, a set of rules you just don't break. And lucky for us, this investor wrote them down right there for everyone to see. And boom, here they are. This list, right on the left side of the board, that's the blueprint. This is the target allocation they're always shooting for. And look at the detail here. Remember that 10% slice for cash and MTF? Well, it's not just a lump sum. It's broken down into a very specific 8% for MTF and 2% for straight-up cash. Talk about discipline, right? This is the very definition of it. So you're probably asking, what the heck is MTF? Well, it's margin trading facility. It's basically a tool that lets you leverage your money. You put down some cash and your broker funds the rest, so you can buy more stocks. Now, the key thing here is that this investor has capped it at a very specific, very controlled 8%. That tells you they're using leverage strategically, like a tool, not like a wild gamble. And this is really interesting. You start to see two different sides to this investor's brain. On one hand, you have the core strategy, this very disciplined long-term plan for building wealth. But then on the other hand, you see these little notes about trading options and intraday. It shows they've drawn a really clear line in the sand between their serious long-term investing and some more speculative, short-term trading on the side. Okay, so we've got the portfolio, we've got the rules. Now for the really exciting part, the end game. Where is all of this discipline and planning actually headed? And there it is, written plain as day at the bottom of the board. The goal, 14 crores. I mean, this isn't just some vague idea of growing your money. This is a specific, super ambitious target. It gives the whole strategy a real sense of purpose, a North Star. So how do you even get to a number like that? Well, it's not magic. It's a process, a very clear step-by-step plan. The idea is to just double the capital, 5 times. Each step is a huge milestone, right? You turn 45 lakhs into 90, then 90 lakhs into 1.8 crores, and you just keep going until you hit that final target. It's basically the power of compounding laid out for us to see. So, we've broken down the portfolio, the rules, the big goal. Let's step back for a second and look at the big picture. What are the major lessons we can pull from this entire playbook?
Okay, I absolutely love this little detail tucked away on the whiteboard. It says, max 20 stocks. This is so telling. It means that huge 50% chunk in equity isn't just spread thin across the entire market. Nope, it's concentrated. It's focused on a maximum of 20 stocks that this investor really believes in. That's a strategy of making smart, focused bets, not just buying the whole haystack.
If you had to boil this whole thing down in just one core lesson, this is it, right here. Every single note on that board, from the super strict percentages to those long-term goals, it all points to one thing. A disciplined, diversified strategy is the engine for long-term growth. It proves that discipline and diversification aren't boring. They're the powerhouse that actually builds wealth over time. And that really leaves us with one final big question. We just walked through someone else's incredibly detailed financial roadmap, a literal blueprint for turning 50